Nuvama Professional is expecting a moderate growth in sales as well as in profits after tax for Nifty companies in the first quarter. They're saying that the key earnings drivers would be perhaps telecom, driven by margin improvement, and a key drag in terms of sectors could be OMCs as well as banks. So let's take this ahead with the Sandeep Raina of Nuvama. Sandeep, great to have you on. Thanks for joining in. Let's actually start with IT because, Rima was just pointing out what we can expect from TCS. Now, give us the overall number, what you're expecting from Nifty earnings, and within that, where is IT going to be? Is it going to play the role of a laggard that will pull down the overall average, or maybe it could be a bit of a helping hand this time?
Yeah. Hi, good morning. So if we just talk about the Nifty earning, yes, we know this time the numbers will be kind of little muted. See, we have to understand the base has been very strong. In the last 2 years, in fact, we have seen very good growth. In fact, if I just see last year, it was around more than 20%. So we can't expect every time that we have, bumper growth. Talking about this time, I think that the growth will be muted. We are struggling maybe 7 to 8% overall growth. And yes, as you rightly said, OMCs will be a drag this time. Now, talking about telecom, I think talking about IT would be moderate. And we have seen that IT has not done too well in the last 1.5 years. What has done well is actually non-IT. Renewables, power, capital goods, they have done very well, defense. But I think IT will be a kind of moderate this time. It will not be a laggard for sure. It will be moderate. And I think mid-cap IT will be a little more interesting than the large-cap ITs that we generally talk about. And talking about TCS, I think TCS, again, we know the numbers, how the numbers will be. They will be kind of, they will be reasonable. I won't be saying it's bad at all.
Okay. What about private sector banks? There is so much opportunity and enthusiasm built into it, but they fail to deliver compared to street expectations. Investors, some of the large investors have sort of shunned the private sector banks, bringing down their holdings. And now some downgrades are coming through. I remember there was a Bank of America downgrade on HDFC Bank. Today, Axis Cap has downgraded ICICI Bank. They're saying it's a consistent performer, but it's getting fairly valued. And therefore, ICICI Bank is now an ad. And they also go on to say that the ROA this year will be lower than what we've seen in last year, or at least Q4 of last year. On private sector bank, do you think some optimism is now getting shaved?
I think banks, again, have not done too well. In fact, in BFSI space, non-banking has done very well. So that part has done exceedingly well, be it on the home finance side or the other side. But banking per se has not done, although the numbers have been very good. So if you see in fact, I was looking at 5-year CAGR of the numbers. They have far exceeded the market cap. They have, the numbers that we see in the market cap. So, of course, based on numbers, also private bank has not done too well. Now we know the big daddy SDFCs and all, they have not performed so well. But ICICI is reasonable. I think numbers also for ICICI are a little far better than most of the other large caps. Axis is also reasonable based on the numbers. But having said that, I think banks should do better than before. What we saw also in last, I think, 2 months, bank has actually done very well. I think that should continue going forward also. But more so, non-banking should be far better than the banking. That is what we are taking.
But just to expand on that point, on banks, would you say, Sandeep, that some of these lackluster expectations, are they already in the price? Because, that's the reason why we're not saying a sustained massive bank rally, right? It's 1 step forward, 2 steps back. So is it largely in the price, or could it actually derail, things from a stock and price perspective point of view? And what could be the biggest issues that come up with banks this season?
See, one thing that we know that during many companies come out with their operational numbers. So broadly, how the numbers would be. Surprises are less when the actual result comes in. So, you price in most of the things before the results. Like, how the revenue is moving up, except NP and all that, which is not there on those operational numbers. But most of the broader numbers are there. So, how the banks will react when the numbers are, unless there are some drastic change in the NPA and GNPA or in the other things. So, broadly, and that's why you don't see the reactions when the results are there. Having said that, I think private bank will do well. Reasonably well. So we are not worried on that.
All right, got it. So let's talk about another big pillar for the market that's not really fired till now, and that's consumer, FMCG, right? Last quarter, I remember, a lot of the numbers had started looking better, at least from extremely low single digit or flat. We started moving towards, mid-single digits. And the companies were sounding more positive as well in terms of rural recovery. So what is your expectation from the FMCG universe?
See, I'll tell you, I'll just give you a broad idea of what has happened. See, in market, you have limited money. Okay, I'm just a little digressing the subject. So you have limited money. Now you have to think, where will you put this money? And we know for the fact in last 1.5 years, the sectors which were doing well, which I said before also were capital goods, power, more so renewables, and so stuff like where defense, infra. So people have to put their money and move out of from the sectors which are not that good. So it's not that FMCG was not doing well; it was doing reasonable, but they're far better sectors that you wanted to put money on. Now the question is, those sectors have become very expensive because we have seen in last 2 years most of these companies have been 4-5x, multi-baggers. Now thing is, I think the fund managers or people who are investors are kind of pruning their that kind of money in capital goods or defense and getting into sectors like FMCG, which has not done very well, and the numbers are decent. See, numbers were never bad, but yeah, numbers were decent, but the stocks have not done well. So I think some kind of money flow will shift towards these kind of sectors, and I think in this market sector rotation will happen. Maybe sectors like FMCG, some bit of good pharma companies which are reasonable at reasonable price. So that kind of things will happen. I think next 1 or 2 months.
Do you want to talk about pharma? You said that some pharma stocks may deliver. Which ones in particular are looking good? Because expectations are quite high from pharma this time.
Right. So as Nuvama, like companies like Lupin and all that, we are pitching. And in that again, I will again digress and move to mid-cap companies because that is where we specialize in. So in pharma, there are a lot of mid-cap companies that are looking good, like 3D Bio and Gina Seco. There are a lot of pharma companies which are looking interesting to us in this space on the mid-cap side. So I think, again, on investing, I think we should look for companies which are growing at 20-25%, and there are many companies. Now, when we look at market, we say, Nifty is looking expensive. You're at 22, 23 times FY25 and maybe 19, 20 times FY26. So that way it looks expensive. But in those also, there are pockets of sectors and stocks which are looking good, which will grow at 25%, and they're reasonably available at maybe one pack. So nothing is cheap, like you're not getting anything a half pack or something, but yeah, one pack in this market is a little cheaper. So you will go for those kind of companies. Like in this also themes, if you want to play, like water is a very, very interesting theme still, looks like, and they are at reasonable price. So I'm saying we still in this market have to look for those kind of companies which are, looking interesting, growing at 20-25%, and, we are able to add maybe one pack or maybe the same kind of piece.
Thank you, Sandeep, for joining in. Need to get into a break. On the other side, we'll talk commodities with the birthday girl, Manisha Gupta.